Today we're going to talk about the basic market maker 24-hour cycle. We're going to look at British pound crosses and the US majors, and we're also going to talk about the great debate. Stay tuned, traders. We'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Almost at the end of the week, some strong moves in the US dollar crosses and a couple of major moves on some of the other British pound crosses. Today we're just going to review the basic market maker 24-hour cycle. We're going to review our simple approach to the markets, but we're going to look at and compare that structural setup on a few different instruments, because I've had a lot of traders email me. They don't particularly see the patterns on some of the British pound crosses, but they're seeing it on the other pairs. And again, as I've always reiterated, I like to trade the British pound crosses because for the most part they're very predictable in terms of their movements for 50 pips. But what I'm more focused on is when I spot the setup, it doesn't matter where I see the setup, I'll trade it on any pair. But that being the case, we're going to look at some of the majors because they have had some textbook perfect consolidation, accumulation, and trend trade setups with the basic pattern, and that's what we're going to review today. So we talk about the basic market maker 24-hour cycle. We talk about consolidation, expansion, and trend. We've reviewed this, but we're going to go over this again today. We'll talk about timings, round numbers, high and low, and structure. Structure's the big picture. Are we in a rectangle? Do we have some kind of geometric shape that we can project as a potential measured move target if our trade thesis plays out? So again, planning our trade, knowing what we're looking for. I have a couple of basic selling setups, a couple buying setups, and a trend trade setup, but it all boils back down to this basic pattern. The template that the market makers use, or the smart money, the banks, whatever we want to call them. Essentially, we close in the US session and the market goes into a consolidation. So remember, the number one thing is the market consolidates and accumulates positions, and we know that there's largely retail order stop losses above and below that range, because the name of the game, of course, is to follow the money. They're after the money. So if we can consolidate and trap traders, doesn't matter if they're retail traders or institutional traders. If we can trap traders chasing these swings and eventually tighten the range up, consolidate it, as we head into our next Europe-London window, or this could be US into the consolidation, doesn't matter, it's all the same. Once that consolidation phase accumulates contracts and we head into the next session, the market will at some point start to expand the range. And typically we will often see this in a three-burst style of movement. It could be two bull candles and a bear candle if it's up top. It might be a 1, 2, 3 with bull candles. Then if it was the other way, first we'll see that expansion occur, usually in 3 pushes. But they'll normally hit the stops, trap traders chasing the move up top before reversing, shifting the market, and moving to the low of the day to hit stops on the bottom. And it could be the other way around. They might hit the bottom first. They'll pull it inside. They might even hit it a second time up top. But they'll pull the market back inside, and typically we'll see a trend occur after we see that stop hunt. So we see a contraction of the range, consolidation, that expansion phase where they make a new high, they make a new low, they hit the stops, they pull it back inside, and they may either extend the move. So sometimes we'll get the extended stop hunt, or they'll pull it back inside and then continue that move into a trending market, dragging traders. They hit the stops first on the top side. Traders have gone long, they get stopped out, and then the market resumes its original trend direction. This one particular example of the basic pattern is enough for you to build on all the other types of setups. Consolidation, expansion, and trend. We can have a consolidation, a breakout, and a pullback and a trend. We can have a consolidation, a stop hunt, a breakout, a pullback, and a trend. We can have a stop hunt high, a stop hunt low, hit it again the second time down low, and trend. We can have a stop hunt to the bottom, a stop hunt to the top, hit it a second time to give us that double top formation, and a trend down in the other direction. The next thing we'll talk about with these stop hunts is the type of candle formations that we're liable to see. Just to review again, we talk about structure. We have our high and our low. We could be inside of a bigger geometric range. We could be inside of a larger Monday, Tuesday high-low range for a measured move to the upside or the downside, but structure's the most important thing, the pattern of the trend. Then we look at our high and our low of the day. Now, on the US majors, we're going to see some just every day they're very clear on a lot of the pairs because they have a nice tight consolidation, and that's really easy to see on a lot of those pairs. Then we'll get our range expansion, and we talk about the three things that markets do. They break out, pull back, and trend. They'll break out, pull back, and reverse to the other side. That's our false break reversal. Or they'll break out, pull back, and they'll go into a trading range. Those are the only three things that markets do. So it's really important when we see that range expansion occur to know where we're at in the big picture. I talk about, has any previous daily highs or lows been hit? Are we up high for the week? Are we down low for the week? Are we at round numbers? Double zeros can tend to act as major support or resistance, especially if we're at the high or low of the week or of the day and the week. And then the timings. That expansion phase will usually occur as we head into our next 12 candle window at either in the Europe-London session or in the New York session, where they'll either be down low for a reversal, or they'll be up high for a reversal, or they may be consolidated. Asia and London may have been in a fairly tight consolidation, and the US session will trend. So timings are critical. And again, the round numbers. Depending on the ADR, most of these markets will be trading off of numbers, double zeros and 50s, where we have stop hunts and extended stop hunts reaching out in most cases to those quarterly levels. We can certainly have trades come off of those levels, but in a lot of cases we'll be dealing with 50 pip boxes on some of the majors. Their movements may be a bit more consistent around the quarterly numbers. And then engulfments and pin hammers. So an engulfment for a long or a short setup is essentially the same thing when that candle's combined as a pin hammer, a pin bar, pin hammer, whatever you want to call them, and the same thing on the downside. In a lot of cases, we may get a engulfment in a trend trade that continues the move with momentum, or we may get a pin hammer on a pullback on the last leg on the stop hunt, and then again that pin is the stop hunt back up or back down into the market in terms of the traders who have already got it right. But it could also be the third push down or the third push up on a three push pattern. But engulfments and pin hammers can also show up together, especially in a counter trend trade reversal. So if it's a sell high setup against a market that's been moving up, we may see that 3-bar pattern, and not necessarily all together, but we might see an engulfment and a bar, another bar, and then a bear pin hammer. And that bear pin is coming back up one more time into traders who have got the trade right, but maybe have already moved their stop to break even, or they're trailing that trade. That pin hammer is the last attempt to clean out some of the money for traders who are trading in the right direction. So that's a really important thing to understand. Consolidation, expansion, and trend. And remember the three things that markets do. So every day I mark off my high and my low. Sometimes we're going to get the range expanding out before we get to that next window. So I wait for a high and a low, and I redraw my highs and lows. That's all I do. If it's a strong trend after a breakout pullback, or a second day move after a very strong day in the previous day with momentum, I just want to make sure that I'm trading with the trend. In order for me to trade with the trend, I still stick to my basic candle formations that tell me I'm either trading with momentum or I'm trading the pullback or the stop hunt against the trend for the continuation with the trend. Just to review, structure, high and low of the day, range expansion, breakout trend, false break reversal, or a trading range, the timings, round numbers, engulfments, and pin hammers. So we want to look for those patterns that where they've locked in the high for the move down or locked in the low for the move up. And not necessarily trying to trade the expansion phase unless, again, we're maybe at the high of the week, and this could be a 1, 2, 3 for the 33. Okay, we saw a couple examples of that yesterday, or the same thing on the downside. So really important, keep it simple, but once they've done that expansion phase and they're working the low for that double bottom or they're working the high for that double top, that's when I'm looking for an engulfment or a pin hammer. The difference between a breakout versus the reversal trade is that a breakout goes outside of the range before pulling back on top for the continuation, or vice versa for the move outside of the range on the downside and a pullback underneath of that range for the continuation. And sometimes the stop hunt will come back into the range, but they're pushing up into the move or down into the move for the continuation with the trend. Let's look at some examples, but before we do that, I want to talk about the great debate on July 11th. I'll put the link below. We're going to have some great traders going head to head. They're going to be discussing the different types of strategies they use, and it's going to be, I think, tons of knowledge. There's going to be something for everybody. I'll be the first one to admit that every trader has to find their unique talent or ability to express themselves. So every trader has found that, and if you haven't found it, you can pick up gold nuggets along the way, and some of these traders are going to be able to, I think, share a lot of their experiences and stories. But trading is a personal thing in that you have to develop that expertise based on all the things that make you and I unique to ourselves. So the great debate, this is probably going to be one of the best events of the year. I'm looking forward to it because, as you know, I believe in constant learning, constant progress, and I don't think there's ever one time when I read something, listen to something, or watch something from other traders where I'm learning just one little new thing that can help me get better. So I'll put some information on that. You can click on the link and take a look at the event. It's July 11th. Don't miss it. It's going to be awesome. Have a great trading session. Stay disciplined. Stay focused. Keep it simple. This master market maker 24-hour cycle is the foundation where all the other patterns build off of it. So I can't emphasize enough. Study this pattern. Have a great week, and may the markets go with you.
G'day traders, Stacey Burke from Stacey Burke Trading. Just continuing our discussion on the basic market maker 24-hour cycle. Before I forget, I want to just remind everybody on July 11th, the great debate. They're going to have some amazing traders: Adam Webb, Nicholas Bovell, Rolf Schotman, Blake Morrow, Anthony Crudelli, and Ryan Paisley will be discussing one-on-one with each other their different strategies, their different approaches to the markets. These guys are great traders. I just think it's great to share that opportunity with everybody because there's something to learn every day. And these guys, I think, have run the gauntlet of trading knowledge, and I'm looking forward to this, and I wanted to share that with everybody. So I'll provide a link down below for traders who want to save a spot. Okay, so we'll be looking at the basic market maker 24-hour cycle, and again, just reviewing structure. We've got the previous day's high. We're looking at the high of the day, and again, my process, I just try to stick to the most basic things. We have the low of the day. We put our high and our low in place, and as we get into the Europe-London 12-candle window, we're on the British pound US dollar cross. The market stays inside of the consolidation. So anything inside of here is a situation where I feel like I'm 50-50 because I know that inside of this range, we either have to be making sure we're already in an existing trend in order to participate in that move in the direction of the trend, or we wait for the market to expand the range. And they come to the high, they tap the high, barely enough, probably enough to trigger breakout traders, maybe hit stops on the middle structure people who possibly traded the swings inside. An engulfment of the high bull, bear doji, at round numbers for the continuation to the low of the day and then breaking outside of the lower boundary. And you'll notice that the previous days, 2 days earlier, that was the previous day's high, and the market has broken out the day before, gone into consolidation, broken out of the box, stop hunting low. Traders who are long, stop hunting down into the move before we get an engulfment of the lower 3 candles. A pin hammer for the move back up towards the high of the day in our gap time before the market goes down. 1, 2, 3 inside bar. And this 2-bar combination together, the doji, bull doji, and the bull candle, is a bullpen hammer engulfment on the stop hunt back against the move from the low for the continuation. I'm just highlighting the process though, again, the high and low, the basic pattern, breaking out, which was a breakout pullback from the previous day's breakout, and then the continuation or the trend move back through the high of the day. We'll look at the euro. This is a textbook example. The market, very similar, hits the low of the day, hitting stops, triggering breakout orders before pulling back and hitting stops at the high of the day. And you'll notice we're still inside of the previous day's trading range before pulling back into consolidation in the gap time. Going sideways, not quite a full engulfment, but then we get a little sideways structure and an engulfment with a bear pin hammer, which again is a 2-bar combination, is a pin hammer for the move 1, 2, sideways 3 into the 12 candle window, and then a pullback into the move off the low of the day, and then resuming the trend back towards the high. So again, high and low of the day, the contraction phase, then the expansion phase, and then the trending phase. Take a look at the pound yen. We start the day fresh in Asia, draw our high and our low. Again, similar to the pound, we had a breakout from the previous day and a pullback. We draw our highs and our lows. Market breaks out, expands the range in the Europe-London window before pulling back, again very similar to the pound with a 3-bar engulfment, and then a pullback into the range, a 1, 2, 3 on traders who were short in the London session, hitting stops, and then stop hunting traders who were long from the move off the bottom before going sideways and resuming the move back up through the high of the day. So again, we're not talking about 50 pips or anything else. We're talking about the basic market maker 24-hour cycle. The Canadian dollar yesterday is a textbook perfect example of that master pattern. We see the high and low of the consolidation phase. The market breaks out at the beginning of the 12 candle window before pulling back and then hitting the stops on the downside, consolidating, and a pin hammer. Traders chasing that trade long back inside of the range before it reverses on an engulfment just prior to the U.S. session in that gap time. Drops down, pulls back, drops down again, hitting stops at the low of traders who have gone long off the pin bar before pulling back and then dropping down for a 3-bar engulfment, continuation through the low of the day. Consolidation, expansion, and then the trend. Again, looking at the Aussie dollar, we have the high of the day. We have our low of the day. Just reposition that a bit cleaner. If I can, there we go. Anyways, consolidation. Expand the range, hit the stops, trigger breakout orders, hit stop losses, pull it back. Do the same thing to the upside. Drop it down again, second time, for pulling back inside, hitting the stops in the US session 12 candle window opening, and then 1, 2, 3 down, inside bar. That's a 3-bar engulfment reversal for the move back up through the high of the day and the previous day's high for the trend. Consolidation, expansion, and trend. So hopefully you got some value from today's video, traders. Keep it simple. The market maker master 24-hour cycle, the consolidation phase, the expansion phase, and the trending phase. And don't forget to save a spot for the great debate. I think it's going to be one of the best events of the year. There's something for everyone. There's going to be some different thoughts shared. And there's just so much knowledge in that one session that I think everybody will pick something up that's going to make them a better trader. Have a great trading session. Stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.